Welcome to the TEK2day podcast powered by CEO Radar. It's your host, John Mayetta. Check us out online at ceoradar.com. Rate your company, rate your CEO. Check out our content at TEK2day.com, TEK2day, where as of late it's been a lot of economic and earnings season related content. We're of the mind that we're for sure, if not in a recession, heading into a recession, number one. And then number two, believe that equities will roll over again coming off of the June quarter report. And so if you look at our most recent article at TEK2day, we published a summary of earnings calls from this past week. Not a comprehensive list. Much of it is technology, telecom, media related. 27 companies. And we provide some color around whether or not these companies provided Q2 guidance, provided full year guidance. Most companies have either withdrawn guidance that was provided at the end of the 2019 calendar year, or they haven't provided guidance at all, or they provided limited guidance. So approximately 40% of companies provided, we'll give you the exact number, we'll go to the videotape. Approximately 40% of companies provided June quarter guidance. Typically you would see that number much, much higher. Some companies historically just don't provide quarterly guidance. They just give you a full year number. My guesstimate is that Q2 number would typically be closer to 80%. And then with regard to the full calendar year, 33% of companies provided a calendar year outlook. And in some cases, it's just sort of high-level guidance, as most companies don't have visibility into the June quarter nor the calendar year. So given that most companies have pulled an outlook for the second quarter, you would expect that you have more variability around second quarter estimates with respect to consensus estimates. And therefore, there's a greater probability of companies missing those estimates given the variability. And we'll see it's going to be the June quarter calls are going to be a time when those investors who have gone long and who have decided to look through earnings, it's going to test their will. It's going to test their convictions. Just how strongly do they believe in looking through bad economic news and company-specific bad news. Time will tell. And then most companies feel as though that in Q3 you'll start to see a rebound. Well, what happens if that doesn't happen? Right? That's the million-dollar question. Given that different communities are going to reopen the economy at different times, and that our assumption is going to be that as those communities open, different communities will, the citizens and businesses in those communities will re-engage at a different rate. Everybody and every business is going to sort of have their own pace to a degree. And so this is going to be very much a patchwork recovery across the United States and globally. So even if, let's say, for example, a given community opens tomorrow for business, and we see that Georgia opened earlier this week, Oklahoma opened earlier this week, but people are still hesitant to engage in the community. And even if the pace of engagement were, let's say, back to 50% capacity, doesn't mean international travel is going to open tomorrow. That's something we haven't heard anybody talk about. So the local economy is one thing, but who knows when people will be hopping on planes again to do business, whether it be in the United States, much less international travel. So we think there's a lot of opportunity for expectations to not be met, for investors to get nervous, and for those lows to be retested again in the summer. And then the last thing will be, in terms of the recovery, given that it's going to be, in our view, very much a staggered recovery. We're not talking about, our point of view is not staggered across Q3 and Q4, but we assume this goes right into 2021. And if you talk to the guys at Moody's Analytics, they think it's a multi-year process before you see a normal economy again, and that normal looks very different than it did a few months ago. So a lot of insight to be gained on these Q1 earnings calls. There's going to be a lot more insight to be gained on the Q2 earnings calls. And we believe that anybody that looks through, quote unquote, these earnings calls this quarter and next quarter is making a big mistake and is setting themselves up for failure. That's all for now. See you next time.